Hello, everyone. So, buongiorno a tutti, buongiorno traders. I'm over here with a famous trader, Scott Pulcini. He has, I would say, a long story. So today is going to be here to explain a little bit of his story. He was a bond trader at the pit in Chicago back in the days. Then he became a private trader. He's trading futures. So he's going to explain some of his strategy today, review some trades. I'm very happy and honored that he's over here with us today. So I'm gonna leave soon the word to him. Just for information, remember that these webinars are for educational purpose only, so don't treat them like investment advice. And then read the disclaimer. Good morning, Scott. Welcome with us.
Thanks for having me, Jay. Appreciate it. Good to finally meet you formally.
Yeah. So finally, I was just talking before to Scott. He has a little bit of background Italian because his surname, Pulcini, is Italian. So I found that a lot of traders have this, Italian origins. And are you trading today, Scott?
Doing all right. Mondays are traditionally my worst day. It's just usually horrible whipsaw trade, but I got a couple winning trades on early. So pretty quiet though, especially for how it's been the last few weeks. I've never seen, I've been trading on screen basically 25 years. And I've never, ever seen this kind of volatility, this sustained with this tariff talk. Like every 5 minutes, there's a new headline. Like it's been really, really crazy and really, really easy to blow accounts. So you got to have your stops in and just hope that the next tariff headline isn't against your position.
Yeah. So before you start, traders, as I said, Scott, stay over here with us because he's going to explain his strategy and what tools he uses to day trade. But Scott, can you tell us a little bit about your story, where you started, where you were working, and how you became I would say, an independent trader?
Yeah. Well, I started out, I had an interest in stocks when I was, sorry, you'll hear that as we're on the webinar because it's alerting me to my trading setup. So we'll go over that. But my grandpa got me into stocks back in the early 90s. We would follow stock back then. There was no internet. We'd follow them in the newspapers. And so that's what got me kind of hooked into wanting to do that for a living. And then I actually did some internships at some like brokerage houses like Merrill Lynch and Smith Barney because I was going to, I wanted to be in the business. I had no idea what I wanted to do, but that side of the industry, I didn't really like. It was too boring. I wanted to be where the action was. So I started working at the Board of Trade, mid 90s, later 90s. And
this is Chicago traders. Okay. This is in Chicago.
Right. Chicago Board of Trade. And I was just I started out as a runner, bottom of the rung as far as, of the totem pole, making $200 a week at the time. Started out there, and then I worked my way up to being an ARB clerk. And that was, anyone that's ever watched Trading Places or seen the Chicago Board of Trade footage when they actually had trading pits. I was in the pit, and I would take orders from the big houses like Merrill Lynch's and Smith Barney's, and I'd turn around and feed them to my broker, which I was telling you before a little bit ago that it was probably the most stressful thing I've ever done in my life because it's not just, when you're trading for your own self, it's obviously stressful, but when you're trading for a broker and you're taking these hand signals that firing in at you from all these different houses that you're watching, these big money houses, you make a mistake, you can blow your broker out. You can cost them, $500,000 in a heartbeat. So extremely stressful. And again, you've got, there's thousands of guys screaming and it was nuts. So, but that got me battle tested. So then I went to, I never actually traded at the Board of Trade, but that's the main goal. When you get there, you want to work your way up to becoming a trader. Right then, as early 2000s is right when the stuff started going on the screen. The trade started going on the screen. So one of my buddies had a guy that started his own trading firm, and it was the Wild West back then. No, there was no education, there was no nothing. This guy basically started the firm, and when I started there, I begged my buddy to get me a job there, and I started there, and it was literally just sit you in front of it, like pick a product, it was like NQ or ES, pick one of those products and see if you can figure out an edge. That was it. It literally just sit you down. So the first day I traded, I was trading one lots, right? And I had no idea what I was even doing. I lost $2,500 my first day trading one lots. And that's not holding positions. That was in and out. At $12.50 a tick, you can imagine how many times you have to be wrong to lose $2,500. So I almost got fired my very first day because I got smoked relatively, right? And then I went the next 2 months, I didn't have one winning day in my first 2 months of trading. So about to get fired again. And then I went on then 9/11 happened, and I was still struggling, and the markets were closed. U.S. markets were closed for a week back then. And I started trading overnight just to try to figure something out, like a strategy or something. And I started trading the German DAX. I think you said you were trading that too. So I started to see these tendencies in the futures, in the German DAX futures, and they would move back then, kind of like the NASDAQ moves now. I haven't traded them in years, but I'm assuming they still trade that way. But I started seeing these patterns. And then when the stock market opened back up, the futures started, open back up after 9/11. I started to apply what I learned in the DAX, these strategies or these edges, and it started to work. And then overnight, I went from, basically about to get fired from my firm to I started to make, $1,000, $2,000 a day. And, relatively, the top trader at my firm that prior year had made like $2.3 million. So it wasn't like I was making that big of money, but I was so confident I had figured it out. I went into the owner's office. This is a guy who was just about to fire me too, right? Because I was losing so much. and I made him a bet that I would be the number one trader the following year. That was 2002. And he was like, "This is the easiest money I've ever made in my life." He's like, "Fine, what do you want to bet?" So we bet like a golf trip. We didn't bet anything monetary, but it was an expensive golf trip too. So lo and behold, I did it. And the following year, I made I think it was my first year, 2002. I made $2.4 million for my firm.
Not a bad paycheck.
Which we split, right? And I won the bet too. So from there on, I was the top trader from 2002 to 2005-ish. I made about $15 million for my firm. And then overnight, disappeared. Algos, back then, it was the low volatility. Taking hold in the market was like historically low volatility, pretty much opposite of what we have right now. And algos were starting to take over the market. So I was a scalper. So I was in and out, just clicking a mouse on the dome to up the market, right? And I just went from printing money to I couldn't make a dollar, right? So then, as a trader, you're always taking losses and like, okay, I'll figure it out. Well, it went, 5, 6, 7 years, and I was just at best an average trader. Like I wasn't even making enough money to support my family. And then, I got that firm basically ended up going under because no one was making money. So I was trading on my own with my own money. And it's a whole different story when you're trading your own money and you're trying to live off it and things like that. So I had quite a chunk, but again, when you have a certain lifestyle and then the money's not coming in anymore, it catches up to you real quick.
It also hits you like in a different way, like mentally and everything.
Oh yeah, 100%. I still have PTSD from those days, right? It's like, I could tell you some ridiculous stories of, losses and, and wins too. But anyway, I hung on for another 6, 7 years. This is like 2013, trying to figure something out. You are still in
Chicago, right?
I was still in Chicago. And then I had to get out of the business because I just couldn't make money anymore. I had 2 little girls at the time and I had to support them. So I went into medical sales for about 4 or 5 years. And then I got a call from Dr. Brett Steenbarger. He's actually one of the top trading psychologists on the planet now. He was back in the day, he was at my firm and he wrote the book Enhancing Trader Performance. And he asked me if he can sit behind me for, that year or a period of months to see, not so much to see my edge, because he couldn't really even tell what I was doing because I was just flipping orders back and forth, but he wanted to know what made me elite. Like, how was I able to make that much money in the market? And that's what the book is about. It's not just about trading. It's like, what makes performers elite? Like, what do they do? Like, I would videotape my trades every day and I'd watch them, things like that. So he wanted to know what made me tick. So he had watched me trade for a period of months. So anyway, fast forward to 2017, he contacted me. He's like, "Hey, I know you're not trading now." He's like, "But you want to take a look at this software that I found called Bookmap.com." And he's like,
so he came up with the idea, correct?
Right. I had no idea it even existed. I wasn't even trading, right? So I'm just like, I'll check it out. The minute I saw it, and this is before the CME MBO data that I'm going to show you, the best edge I've ever seen in my career. The minute I saw the way the orders, this is what he said to me, is like, the way the orders are displayed on the heat map, it reminded me how you used to trade when I sat behind you when I was writing the book. I'm like, okay, well, I'll check it out. And the minute I saw it, I'm like, I'm back. Like, this is exactly how I have to view the market to make sense, right? So I actually got back in, and I was so, like I said, the PTSD, I was so burned by futures because I had made, the millions and then couldn't make money anymore. I didn't even want to trade futures. So I got back in it. I was going to trade stocks. So I was studying with SMB Capital at the time because Dr. Breck was affiliated with them, and I was learning how to trade stocks. And then Bruce from Bookmap told me about the CME MBO data, and it shows the stops and the icebergs, which I'll show you guys. And the minute I saw that, I'm like, I just started seeing these incredible edges of the same patterns every day unfolding at these areas, because these, it's basically where traders are loaded up and you take advantage of that. So then I said, you know what, there's just too much opportunity here in the future. So I jumped back to futures, and I've been trading futures ever since. So
Scott, can you show us like some examples about where you're saying about NBBO and all of this? Can you screen share your screens right now so that traders over here understand what we're talking about?
Right. So this is gold right now that I'm looking at. I actually long a position in gold. We'll go over that trade. But for someone that is looking at this chart, their head's probably spinning like, oh my God, what are all these lines? Once you understand what it is. So I've always made my trading very, very simple, right? The simpler you can make your trading, in my opinion, the better you're going to do. The more you introduce, because most traders think, and this is straight out of Trading in the Zone, the book by Mark Douglas, most traders assume the more things they can add, the better they're going to do, right? The more they understand the markets, the better they're going to do. Yeah. The better they're going to do. And it's the exact opposite as far as, yeah, you want to understand markets, but it's not having, if you have all these different things you're looking at, you get conflicting information and you never pull the trigger, right? So I keep my trading very, very basic. When I explain this, you'll see it's nothing. This is nothing. This is very elementary of what I'm doing. But, I made millions of dollars just staring at this, literally in and out, in and out. So it doesn't, and I didn't even have charts back then. I didn't have a chart up back then. And that's how I made that kind of money with the simplest form of trading. So it just goes to show you, you don't have to have 85 things you're looking at. I made millions of dollars just staring at orders coming in the order book. Again, that changed because the algos are so fast. I was one of the fastest clickers on the planet, but I wasn't as fast as a computer, right? So that's what knocked me out of the game then. But my point is, what I'm doing now is based off of my volume experience, right? Because I used to be the big trader. Like, for instance, this was sell icebergs that came in. Icebergs are hidden orders in the order that don't display in the order book. All they have to show is a small percentage. So they have to show about 10%.
Scott, sorry, 1 second. Explain to traders, because over here, I believe we're going to have also some beginners. Explain what are iceberg orders, please.
Right. So that's what I was getting at. So first of all, you need to know, so the CME came out about 7 or 8 years ago with this enhanced data, right? It's called the MBO data. You can see the screen, right?
Yeah.
So up until then, and still a lot of data providers still have this basic market by price data that's not enhanced. So even in the order book, when you look at an order book, if you're getting market by price data, which a lot of them still have, and a lot of them haven't moved over to the MBO data, most of them haven't moved, which I don't understand. When you look at an order book with market by price, like the CQGs of the world and things like that, all you're seeing is the top 10 prices above and below. Those are the only real orders in the order book that are actual orders, right? So with the market by price. So all this stuff that you see here, it was real at one time, but it's not updating real time.
Got it.
With the MBO data, every order in the order book is real, and you can see these orders displayed on the heat map, so that the bigger the order, the darker the color orange here, right?
So we have like a depth of, let's say, the level 2 that we see another way.
Right, exactly. Right. So this big order in here is showing as heavy, big liquidity. We call it liquidity in the order book, right? So what's important to know about this is the longer it's been in here, the more whoever that entity is wants to get filled. It's not the opposite. So if you were a newer trader, you would come in here and say, "Wow, look at all those buy orders. I want to get long here." It's actually the opposite. These markets will gravitate. Whoever this is wants to get filled. If something comes out that's negative to gold, it'll blow right through here. Well, that tells you something that they just leaving their orders sitting there. They want their fill. And when the big money wants their fill, they get their fill. So it doesn't mean it's going to come down here right now, but the odds are by the end of the day, this is going to come down and fill this liquidity. And again, this is all based on my experience. So the game I used to play when I made the millions of dollars is I would load up, I put huge orders in the order book. And back then, even the S&P, which I'll pull up here because so many people like trading this market. I don't even like trading it anymore, but I trade it because it's the edge is inherent in all these different futures markets, which I'll show you. But I used to load up the order book. Like back then I could put on 3,000 E-mini, up to 3,000 E-mini S&P futures, wow. Right? So I would load up like 1,000 on the bid, 1,000 on the bid. And then I would start selling up here, right? So this would be my order, like in the order book. You would, this day and age, if I were doing that, you would see it represented just like that, right? So then I would start to sell a little bit, and I would test the waters, kind of like you see here. So these bubbles that you're seeing on the screen here are market orders, right? So it's just
so you would buy, let's say, the bid at 54.25, and right away put your sell at 54.62.
Right. Well, I would load up. I put my orders in first. Then I would prepare to push the market into my orders, right? So that's what I'm saying is the odds, like this is yes right now, the odds of this getting filled today are ridiculously high. So we have trades that actually take the trade and we trade it till the liquidity, right? So I'd be sitting in the order book here with like 2,000, and then I would start selling a little bit, and I'd see how the market react, kind of like you're seeing right here. And like I would sell it and it would react down. I'm like, okay, there's no buyers. I would sell it again. It would react down. Then when it got close to my 1,000 lots in here, I would just step on the gas with any remaining contracts I had. If I had enough 2,000 left, I would just sell. People see this activity and jump on your coattails because they think it's big money, selling, and then they would just sell right into my bid, and I'd be out of my trade. So it was just
that's a form of manipulation.
Absolutely, but that's not really, right. It's not manipulation if you intend to get filled. Nowadays, it is illegal. They call it spoofing. So I would play the game. Back then, spoofing was legal, right? So what I would do, and again, back then it was legal, and I was hated across this, throughout the street, right? They hate my guys in my own firm hated me because I was flipping the market around nonstop, right? So I would come in
one of those market makers,
right? Well, exactly. So it would come down close to my bids, and I would load up the order book. Say I put on a bunch. I'm short 2,000. I had 1,000 left. Well, I put like 1,000 lot on the offer to scare the market down into my bids. And then I would yank my offer, and it would be like a vacuum, and then there's nothing there, right? So it's kind of like that today with these algos. They do the same thing. So spoofing's supposed to be illegal. It's not. I mean, it's illegal, but they still do it. So anyway, that's the game I would play all day, every day. And I used to average, this is back when the E-mini S&P was trading 500,000 contracts in a day. I was 50,000 of those round turns every day. Wow. So I was 10% of the world volume. I was averaging 1 million contracts a month.
It was still like the mini $50 a point.
Right. Exactly. So there was no micros back then. There was no micros or anything like that.
Imagine traders that he was trading up to 3,000 contracts, each point $50. So right. Make traders make your accounts over here. Okay.
Right. Exactly. So that was the game that I would play all day long, and it worked for a long time, and then overnight it just disappeared, and then I couldn't make money anymore. But with that style, I was going to cover something else too. I forgot, but that was the game that I played all day long. And again, the games are still being played in here. You can see the liquidity in here. So this is what this is showing you. You can see the algos in here right now playing games. They put in orders, they put in offers, they put in bids, put in offers, put in bids. So they whipsaw traders to death all day long, especially when nothing's going on, right? So back to the iceberg information. So they know, just like we can see, there's nothing going on right now. So you tend to get this type of trade, especially at this time of day. This is a horrible time of day to trade between 10:30 and 12:30 Central. I've lost millions and millions and millions of dollars in this time period, right? Because this is when the nonsense starts to go on, right? Because the big money from New York starts to go to lunch, then Chicago goes to lunch, and there's no one in here but these algos, right? So you're much better off leaving I used to have to physically leave my desk between those time periods just so I wouldn't throw away money, right? I keep saying to this day, I should be getting up at this time period and not trading, just because it's just a losing proposition. And I'm talking across all products too. And I watch 15 different futures products at once. It doesn't matter if you're talking soybeans, gold, natural gas, they all turn at this time. And you can see, look at this guy in here, whoever this firm is, playing the game with there's the offer. Here he is. See how it's moving back. It's just a big game right now.
Scott, according to you, there's much more manipulation right now, let's say in 2025, in the last months, or for example, in 2020 when there was the COVID?
I think there's more manipulation now. I mean, especially as more and more algos take over. But these algos have been getting their handed to them lately. Like Nasdaq's a great example. So this chart, there's a little more liquidity in here today, meaning the gains for the last week. Which is just hysterical, because Nasdaq usually looks like this, like something like natural gas, right? You can see again, when the market looks like a Christmas tree, that you can see this how algo-ridden this is, right? All this activity. So Nasdaq usually looks like that too. For the last week and a half, 2 weeks, it's been black, meaning there's no liquidity in the market, because I guarantee you these game players in here got crushed with these tariff headlines, right? Just like a lot of traders did. Like you're in a great trade and Trump says something positive and the thing like it did last week when it ripped 10% in about 30 seconds, right? So I guarantee you some of these guys, some of these firms, algo firms got blown out during that activity, right? So
you mean like even the market makers, even these big firms, they're losing money. They could lose money in these big plays.
Oh, absolutely. Because you can't control. You're on the sell side playing your game right here, like they're doing right here, and a tariff thing comes out and this thing rips 10%. These guys, you can't get out of the trade. Like you're going to blow out, especially if you have big size on. So I guarantee you that's what happened and why a lot of this liquidity. And you'd be surprised. Most of these markets are only one or two big players in here with the games, with the algos that are the liquidity. Like I always use crude as a great example. So crude, it's so funny. You'll be watching. If you watch it long enough, you'll see all this liquidity in here. It'll all turn off and then it'll turn back on. Then they'll turn off. So they're either testing something or whatever. But the point is, it's showing you it's one person. It's one entity. It's not everybody's turning off their liquidity at the same time. Right?
So you mean one person? It's like turning on and off the algos, correct?
Right. So you'll see this disappear. It'll turn black and then it'll come right back on. So whatever they're doing, my point is, it's one person or one entity that is controlling all the activity in here when nothing's going on. So that's why you get this type of trade. When there's nothing going on. When the big money starts to play in here, that's when they like back off or turn it off or whatever. Mm-hmm. But that's the point. We can see what the big money is doing many, many times with these icebergs. So Dow is a perfect example here, right? So this morning, so back to the icebergs. The icebergs are hidden orders in the order book. Why are they hidden? Because the CME allows big firms to show only a portion of their trade. So it's about, I think it's 10%, right? So if some big entity wanted to buy 100 contracts here, like they did here, right? It was a little over 100. They would only have to, when you look at the order book, you would just see like a 10 lot, right? So 10% of 100. But when the market comes down and trades into that 10 lot, there's another 90 behind it as an iceberg. Why do they do that? Because of the algos. So if I'm a big player in here, and I mean, you look at this order book, it's a bunch of single lots, like 6 lot, 5 lot, 7 lot. If I come in here and put 100 in, these algos will pick that up and run the market away from the big size, trying to get them to chase the order. So it's just we were talking about the games, right? So if I dropped 100 in here right now, I guarantee you these algos will run it away. So they know this person needs to buy, right? Well, they're going to make them try to pay a worse price. The algos throw in a bunch of offers. It's kind of like the game I used to play. This entity has to chase it up to get their business done, right? Because they're not price sensitive a lot of times. They just got to get their order done. These algos front run them. This guy has to chase. They get filled on. The algos get filled on their offers way up here, and then this guy's done, and then the algos just rip it right back down to where it was, right? So these firms have to use iceberg orders, these hidden orders, to put big size in the market, right? So if you know that information, it's the most incredible edge you can possibly have in futures markets, in my opinion, right? Because the big money is not always right, but when they're wrong, you take advantage of that too. So these events, so right off the bat, someone was in here selling. There was a lot of sell ice, then someone was buying, right? So it doesn't usually look this convoluted, right?
But a question over here, because I received it. First of all, yes, traders, we don't have the iceberg orders on the stock, so only on the future. Second thing, what are the best time, I would say, to spot these iceberg orders if they are? Like at open, during midday? What is the time that you consider like the best for, I would say, an independent trader, a private trader to trade?
Right. So from the open, 8:30 Central to about 10:30 Central are the best times. 10:30 is when it starts to look like this, where you see just algos all over the place, whipsaw on traders. And then the last hour and a half. So 1 o'clock, well, that's 2 hours. So 1 Central-ish to 3 p.m. are the best times to trade.
And you trade mainly ES and NQ, or for example, you trade also gold, CL, and other...
Everything. So because the edge is inherent in these volume events, right? So from watching so many of these over the last 8 years with my volume experience, I've figured out what is a relative amount. We call it a threshold. What is a relative amount of icebergs or stop runs to trade off of where it's trade worthy, right? So I don't just trade every time an iceberg. Like for instance, this one was 31 icebergs. I don't trade off of 31. I do trade off of Dow. 100 is a lot. Same with NASDAQ, right? So NASDAQ, to draw these zones, and you can see the sell ice. I was short on my AM webinar today off of the sell ice event. The market came up here, somebody was selling right here, and I took advantage of this trade. We caught this trade in my webinar, right? So I forgot what I was going to say. this is how they take their orders. What was I just talking about? I had something great I was going to show you.
The amount of the threshold and the time of the day that we trade.
Right, exactly. So in NASDAQ, 150 is a tradable amount, meaning the threshold was hit. So you can see here there was 150 here exactly, and then right after that there was another 110. So I added these together, and that this what the zone was. But it varies from product to product, right? So 150 in the E-mini S&P is nothing, right? So I look for, like, for instance, this is 500 iceberg buy icebergs up here a little bit ago, and that didn't really work out for them. That's what I mean. Paper's not always right, but I wouldn't even have traded this iceberg because it's not enough. So from ES, I need to see 700 or more icebergs to trade it. And then
in that case, visually talking, if the iceberg over here, this ATR, let's say, would be 1,000, you were short, right? Instead, if it's on below the zero, you were long, correct?
What I didn't understand.
Like over here, 8 o'clock, you see that iceberg
right
exactly there. Yeah, so that would be a short play.
Potentially. So all these volume events, and it goes across all markets. That's why I watch so many markets, because there's so much opportunity, in all these different markets. They all follow the same pattern. I can show you everything from soybeans to here's a good example there were bonds, right? So you got bond stuff firing off, the 30-year bonds, buy ice there. There was a stop run. So the stop runs are another very important area. So I have 6 distinct setups that I look for that I've named from these iceberg events. So this was a stop run. So usually stops are retail traders puking out positions. It's not initiative selling in this case, most of the time, right? So when you see a stop run, you usually get the instant rejection. And this is a perfect example of this. So today, this thing, and these other levels are gamma levels. We can get into that. This is Mentor Q. They're awesome, incredible. And I use spot gamma. But the point is, you've got a stop run down here. You see this huge stop run, instant rejection, right? So we take advantage of this with this MBO data. So each market has their own threshold. So for instance, in silver, it's 150. So when I get 150, it's tradable. So back to your original question, where would I have gone? Say I did trade this ES trade and say this was threshold. Well, these markets, what I demand, and it's better off looking at another market because there's not an event there. So from watching so many of these events, I have determined the best way to figure out if it's going to be a bullish or bearish event is when it could push an ATR, a 5-minute ATR, which is just average true range. If it can push that far from the event, then it's a bullish event. If it pushes down, then it's a bearish event, right? So that is the best way that I've determined to judge. So when I first was watching this, I love getting in right in the middle of the zones too. We do have certain strategies we'll take right when the event fires off. But most of my trades, 90% of my trades, I demand the market move out.
So you wait a little bit of confirmation before entering.
Absolutely.
And that goes against, you don't buy a dip like a falling knife.
Exactly. And I know that goes against, the educators out there that, talk about R's and risk reward, and you want to risk 1 to make 5. Well, yeah, I like making 5 times my money on trades too. But when I get into state, especially with these algos, like look at this algo and look at all these algos in silver. So for me, if I were to go, and I should have gone long this trade, I missed it on my webinar, but there were a couple different strategies here. But say I take my traditional long. So here's the ATR, that's the blue line. I get in once it can show me it can push just an ATR out. So we say 115% of an ATR. This is my zone drawing tool too. I'll go over this here in a second. And this is what's so great about how I trade and how I can help traders. This zone drawing tool not only shows you the event, it tells you where you get in, where you get out, and your position sizing based on your account size. So this is where how they lose money, right? They don't know.
Your process is very systematic. This is the point.
Exactly, which it has to be. You have to be systematic in the market.
I love this part of you. I really love it, traders, because if you don't trade systematic and you trade discretionary, you have more anxiety, you go in doubts, you're simply going to have maybe not a good plan. Trading has to be systematic.
Absolutely. And I used to be the biggest field trader on the planet, one of them, right? I was just clicking in and out of the order book based on what I was feeling. So my point is not that I'm end all be all and I know everything. What I'm saying is if I can't make money as a field trader anymore, it's going to be, and I was one of the top in the world, it's going to be real hard for other traders to make money as a field type trader, right? So that's why everything I do has exact rules, where I get in, where I get out, how much size I put on basing how much I want to risk per trade. So and that's where the traders fail the most, because they're overtrading their account. So they're trading too big for their account size. They have a bad day, which is very, very easy to do lately, as anyone knows that's been in the markets. They blow out their account, right? So, and then they also don't know, where do I get in? Where do I get out? This tells you everything. And if you go to the Bookmap marketplace, so that's bookmap.com marketplace. I'll just show you this here real quick.
And I'm looking traders right now. Yes, and in Q start a little bit of unwind.
What would you say there? I'm sorry.
Tesla, yes, and Q, they're starting like to dump over here.
Yeah, well, you heard also there. You heard those little echoes in the background. Yeah. That was a hero alert too. So I watch real time order. I don't want to confuse traders thinking I'm watching so many things, but I do watch the order flow. And this just had a hero alert. You can see this flow alert. So this is showing me options activity. So options dealers get loaded up. They have to turn around and hedge in the futures. They're a big player in the futures, right? So you can hear that constant noise there. That means as this market was moving higher a little bit ago, there was a flow alert, and now it's turning over. So that's just another strategy we have. But yes, and you can even see here they are hammering all of these stocks. So this is tick strike. So everything I use to, I don't know if there's an area where I can post this in here.
Yeah, you have a chat over here on the right.
Okay. So this is my info. This is everything that I use. And I got some new courses out too. This ATR reversion. We'll go over this.
You can also send me later. I will post in the description when we do it on YouTube.
Yeah. So thank you. I appreciate it. So this is the zone drawing tool that I'm showing you, right? So when a trader in my trade room who's been with me for a couple of years, he's a brilliant guy from France. He found out a way to draw these iceberg events that I was showing you and stop runs. He draws them, because before, if you ever watched my webinars for the last 8 years, I would see this activity. I'd have to come in here and manually draw a zone.
Got it.
On where this happened. Now this stuff draws automatically. What's ever happening on the subchart will draw here with our entries, with the sizing, everything. It's awesome. I mean, his name's Johan.
That's an awesome tool.
Yeah, it's incredible. So you can get access to that. The Pro, there's two different versions here, the basic and the Pro. The Pro shows you these. I have another trade called the reversion trade, because less propensity for these markets to a lot of flow alerts. The ridiculous propensity for these markets to retreat back to the volume event is insane. So we actually that's why it's called a reversion. So here's a perfect example. This was gold earlier, right? So markets will go. So just to explain now what you're looking at now that you know a little bit more. First of all, when it looks like a Christmas tree, that's just orders that were in the order book that they were pulling. Then what you see here, this is the zone, and now the blue line's the ATR, the yellow line's where I enter longs, and then this is where I get out of if I was long, and then if I was short, I get in down here. Then you're looking at reversion lines here. So this is the 5-minute ATR, the entry for this trade. So I have trades that play for a move back to the volume event, and then you're out. So this is the best scalping method that I have seen to be able, because there's so many traders that want to scalp, because it's against human nature to get in a trade and watch your P&L and watch this for 4 hours, right?
Yeah.
People don't like to do that. It's against human nature. That's why trading is so hard. With the best way to scalp in these market conditions with this kind of algo activity is the reversion trade, where you're taking the 1, the 2, or the 3 ATR, 5-minute ATR entry back to the zone. Which one do you take? It depends, right? So if you're going to concentrate on the 1, you take every single one that you see to let the edge play out, right? You don't pick and choose which ones you're going to put on. That's what traders do all the time too. I'm sure in your room with stocks, like they have, you give them the exact, this is the pattern, this is where you get in. And sometimes they skip the trade because they don't feel like it's going to work, right? If you're going to play an edge, if you're going to play a probability, and that's all trading is trading probabilities, right? And then you just, every time you see your edge, you put the trade on, no matter what you think is going to happen. And what I tell traders too, if you're so sure, if you say you're supposed to go long here, but you don't feel like it's going to go up, well, if you're so sure it's not going to go up, why don't you bet your house that it's going to go down then, right? You don't do that because you don't really know what's going to happen. So that's the point. So you just, if you have an edge, you just continuously put the trade on. And of course, you stop yourself on a day, right? You should never lose. You shouldn't be putting on more. If you're trading your own money, your real money, you shouldn't be risking more than 2% on a trade. And the most you should lose in the day is 5 or 6% of your account. And if you hit that amount, you just
in this environment where, for example, a tweet of Trump simply like makes the market go up and down. We saw last week. First, we had like one day that tariffs came out minus 10% on Tesla, another minus 5% the market, and then plus 10% the market, plus 22% of Tesla. You look at these tweets right now, you're following the market, you trade during the news, or you prefer to trade out of the news? What do you suggest?
Well, a lot of these things you have no idea it's coming, right? If you see, like, for instance, I have on this, so this is Financial Juice. This is on my my other computer, so you can see here. So this is like the headlines, Financial Juice. So you can get, so everything, I'll post this in here, by the way. Everything on here is what I use. You don't, like, if you want to follow me or learn my method, you don't have to get everything that I use. This is stuff that I use. You may find it useful, you may not. But all of these things on here, and I'll post it right now, you get discounts as well. So if you want a Financial Juice, you click on that Financial Juice link, or Bookmap, like this is a Bookmap discount, right? So all these things are, here's the Bookmap discount. So that's all discounts. I just posted it. But anyway, as far as the tweets and stuff, you can see, like right now, right? If I'm watching this right now and I have a position, first of all, you don't want to be trading this time of day. Like I keep saying, something bigger is going on right now. So I might be trading, if the relative volume picks up. But you can see over here, right? Like I know at 9 o'clock and 10, so in 25 minutes, I know Fed market's starting to talk. You do not, if you can, you don't want trades on when these guys are talking, because it's like it's new information hitting the market. It's just like not holding a trade into the unemployment number or a Fed rate hike or whatever, right? So the problem is these idiots chirp all day long, every day lately. Like every hour, there's another Fed guy spewing something, right? Well, my point is, if you know this is coming out, you can back up. A lot of these headlines, you don't know when they're coming out, and he gets on his Truth Social or he tweets something, and you've got to just accept it. Like the market's going to rip in your face, not most likely, but if you're on the wrong side of the trade, there's nothing you can do to prevent that. You can prevent it if you know they're coming out to talk, right?
But so would you use, for example, let's say the news comes, like I think was on Thursday or Wednesday, 1:15 p.m. Trump tweeted, and they said the 90-day stop of the tariffs for Europe. In that case, after the news hits, would you enter the market, or would you simply like bypass the news time and look to trade maybe 1 hour later?
I'll trade it. This is the beauty of what I'm doing here, right? So I don't ever put on a trade unless I get a volume of it. I don't care what area we're in. So that's what my strategies. So when I talk about strategies, right, I have different strategies, meaning areas that I will look for, and that's all these, right? So these, and I just put out a course on this too. It's on my website. It took me 3 years to finally do this course, but it goes over. So these are position trading strategies. What is this? These are just my areas. So like the Izzy trade, right? So I draw these inflection zones. The Izzy is short for inflection zone, right? So I know these areas are really important. So say ES moves into this area. This is where it gapped down the other day, right? I know that's an important area. I still will not put a trade on in this area unless I get a volume event that is in the direction of the trade that I want. So this is right now going to be a fade zone if it moves up in here. If I get a bearish event, I'll put the trade on. If I don't get a volume event, I'm not trading. So yeah, once that, so I was on a webinar with Mentor Q. That's these gamma levels that are on here. I was on during that time when that happened. So this all happened within literally 30 seconds. I took a short on the webinar. He came out, they came out and said, "Oh, I'm raising China's tariffs to 150%. The market dropped, the NQ dropped like 400 points in 5 seconds. Yeah. Right. Within the same breath. So I was sitting there gloating about my trade on the webinar. Within 10 seconds, they came out and said 90-day reprieve, and the market moved 10%. Again, like I got stopped out in literally 3 seconds. So the point is, yeah, if that's said, so say that happened and I had to get out of here, but there were events, right? So say it did this and it did that and it did the 10% rip and I got a bearish event or a sell ice like into that Izzy zone. Yeah, I'll take that trade, right? The point is, if you know he's going to be talking, like when he does this executive order signing stuff, you probably just want to stay out of the way. But I will take, yes. So, but my point is, like most traders are always like, oh my God, what should I do? Should I trade here? Should I not trade here? This takes all of that guesswork out for you because you just wait for your volume event, right? As soon as you get the volume event, speaking of which, I was long gold. I need to get out of this trade right now. So my rules for these are too, when I get a new event, so I was long, I got a new event. This just proved, you've heard, we call them Bookmap Fox, where it reads off when the zone validates long or short. Well, this the sell stop event, which is usually a fade, this one's called stop and hold. When you do get a stop run and it holds, it means there's bigger money behind it. Anyway, this turned into a bearish event. I was long off of this. I did get out of some up here. This new event just came in. I'm out of the trade. And I could put on shorts here if I want to, right? We can go over some trades too. Again, I hate trading this time of day, but I will. If you want to go short right now, gold. Now it's time to go short, because based on my volume event, I have different strategies where I'll either get in right when it moves out of the zone, or I wait for an ATR retest confirm. Right. So this is all stuff that's probably flying over people's heads, and I understand that. But what I'm doing is very, very basic. Once you understand what you're looking at here, it's very simplistic, and that's how I like to keep my trading.
Scott, we have a question over here. By the way, traders, if we have questions, please reach out over here. We have a chat inside over here, webinar jam. In Bookmap, do you ever use the volume pressure indicator?
Oh yeah, absolutely. So this is a little more advanced, right? So I should have this on here. Let's see. So this is so they actually, you're talking about Market Pulse, right?
Yeah.
So Bookmap actually built Market Pulse for me. So I went to the owner. This was like 3-4 years ago, right? So this is Tick Strike. I still use this. I've used this for 15 years, right? So this is telling me when we start to get a heavy, so it's like a meter, right? It ranges from 1 to 15. So I have a set at 11. So meaning I want to know when there's, and you can use this for all, you can use this for all the stocks too, for your stock trading stuff. But this tells me if it's 11 or higher, there's some serious action happening where I want to pay attention. Other than that, it'll light up, but it won't make a sound, right? So I've had that for 15 years, and I went to Bookmap because this has limitations. They have not had they just finally did a software update after 15 years. But I'm like, well, I want to see what this does, what this thing does. I want to see the past action. Like, okay, when these were all at 15 sellers, like how did the market react after that? And there was no like historical data. So they originally built the Market Pulse for me. So you can see, and I'm going to bring this up right now. Actually, let's bring up, you can see it on ES. Actually, I had it running on ES here. Right. So this is Market Pulse right here. So I see these little spikes. So this is showing you both times. So let me show this before I explain it, right? So you go here. This is an add-on. It's called Market Pulse. So this is called the volume pressure imbalance, right? So I have mine set to an hour, the training period, meaning the look back period. I have it set to an hour. It's very important to know if this is the most buying or selling in the last hour, and the threshold 70%, meaning if this is 70% or higher of the most buying or selling in the last hour, it colors and you get a sound too. So you get like these things right here, right? You can kind of hear it in the background too. So I have this one turned off, but it'll alert you with the sound, and you can see it here. So what did this tell me back here? This is aside from the stop iceberg event, which is the most powerful I've ever seen. You can still trade off of this, and you're looting stocks, right? Absolutely, you can use this in stocks. So I don't know what happened here. Market moved up, most buying in the last hour. How did that work out? Wrong. Came in here. So both times, and I have patterns for this too. You know, it's kind of works like a stop iceberg event. Like you take advantage when you see these guys jumping up and buying heavy, and they're wrong right off the bat. Just use common sense. What would you do if you came in here and you bought a ton of contracts and it's immediately in your face? When that thing's coming back, you want the hell out when it comes back, right? So that's the whole point. See how simplistic it is? It happened here again. So many times you'll see these areas, these guys get really aggressive. They buy like, oh, it's going up. It's immediately in their face. It'll come back. It'll retest the area, because these guys, whoever's, a lot of times these are bigger players. They push it right back to their area so they can get out. I know this because this is the game I used to play. When I was wrong, any remaining bullets that I had, I would push the market back to that area so I can get out of the trade. Well, that's what the next wave down is, of these traders getting back out of the trade. So the point is, you can use this stuff. So there are icebergs in stocks, but you can't see them. You don't have an ability to read them. Bookmap does have a way. It's like a synthetic. It's called the strength indicator. I don't want to get into that, but you can see them in there. They are in there, but they're not it's not the data like the CME provides. Why does the CME provide this data? This is just my opinion, and I know the CME very well. I have a big history with them back when I was one of the biggest traders on the planet at the time, right? So they knew exactly who I was, so on and so forth. I had a problem that I was trading against a guy that was crossing his own orders. That's a long story. My point is, why did they give this data to the retail trader, right? Obviously, icebergs are supposed to be hidden. The big money can't like that we can see their activity, right? That's the whole idea of hiding your orders. My opinion is, around 2016, 2017, right, when they came out with this data, the retail trader was dying, right? Because it was just so hard. The algos run everything. And it was like algo. Then when there's no retail traders in here, meaning fresh meat, fresh fish for these big firms to take your money. And if you don't think that's what's happening, that's what is happening. Trading is a zero-sum game. Somebody's winning, somebody's losing, right? So my theory is, and I'm pretty sure I'm right, is the CME was like these firms were complaining, there's no more retail traders. How are we going to make money? I don't want to go firm versus firm. Let's get some fresh meat in here. So I think the compromise was, okay, we're going to give you this enhanced data. We'll give the retail trader this enhanced data to see this iceberg activity. And you got to accept it, big money, big players, or else you're not going to have a retail trader in here. So I think it was the CME throwing the retail trader a bone by letting us see this information. Don't know if that's for sure. Could they take it away? Absolutely. Back in the day when I was the big scalper, you can see counterparty, right? So you can see it's exactly how I had my dome set up. I was trading on Trading Technologies. Down here on the right, I would jump up and buy 300, and I'd see the 300 buy down here, and it would tell me the exact house I traded against, right? So that's important information, because when I was in here every day, it was like a poker game, because there was we were called locals. A local is like someone who trades for themselves, or independent trader type of guy, or trades for a firm, but they're independent. I'd be in here and I'd jump up and buy 300, and I see what was my nemesis. And back then my nemesis was house 990, 910. Anyone who traded back then knows exactly what I'm talking about, right? So if I would jump up and I'd see I bought 1,000 from this guy, I know how many bullets he can put on because I trade against him every day, right? So I'm like, okay, I got him loaded up. Now I'm going to push the market against him. There'd be times I'd jump up and I'd buy 1,000, and it would be a house number that I've never seen before. And I'm like, I got to get out of this trade because I don't know how many contracts this entity has. I don't want to mess around with this person, right? So it was huge information. All of a sudden, disappeared. Why? Because I'm sure the big money said, we don't want people seeing what we're doing, right? We don't want them to see it was us that did that order. So they did away with it. Could they do away with this information? They could. I don't think they would, because I think it would look real shady at this point. It's been around for 8 years, but you never know. So the point is, take advantage when you have this information right now.
Yeah. Another question. Traders, feel over here, we have still like a couple of minutes. Right question if you have. Beto is asking, do these indicators tools work also with small cap stocks? I believe you're asking about the volume pressure. So as far as I know, the volume pressure works also for stocks.
Yeah, absolutely.
Yeah. So that yes, traders.
I'm trying to see here to see if I can find some. So on my other computer, I do have the Bookmap. I have the stocks up here. See if we can just see an example here, since a lot of you guys are stock traders, obviously. Let's go over here, bring that over here. So this is Amazon. Let's see here. So I got to get this. So this is what I was talking about. So see these numbers here, it makes your head spin. These are synthetic icebergs, and this is the strength indicator on Bookmap. They just came out with a new version of it. You can turn it off. So you see how these are actual icebergs that are firing off here, right? They're synthetic ones but you can't see it doesn't look the same because they don't offer the NYSE or the NASDAQ. They don't offer that information for stocks. But you can get it from this stuff, right? But I'm going to turn that off right now because it's giving me a headache, right? So you turn that off. Now let's bring in so this is a good way to see how to do this, right? So you go to over here. I thought I had it running on here. So this might take a second to populate. So you go to, where is it? Market Pulse. There. Oh, I was on it, right? So you hit create. So I'm on Amazon. Go over here, pick the volume, pressure, and balance, right? So this is all default. So it means it's going to show me that little spike in color like I showed you on ES at 70% or more of the threshold. So meaning if it's over 70% or more, the biggest buying or selling in the last hour, which is really important information. It'll let you know verbally or audio and with that little price spike. I keep all of this default. The only thing I change, so you can see this is showing me the last 5 minutes. I don't think 5 minutes is, that's too short term. So I move this to an hour, right? And then I hit the play button here. And now this will populate and we'll see what it looked like who were the aggressors, right? Were they wrong? Because there's patterns around this stuff too. So you can do this for any stock, right? And then here too, look at this. So you can imagine the thesis, or I call it a guess on what's going to happen, right? You can see all this liquidity. There's liquidity there, this liquidity there. What does that mean? On a day like today, it looks more like a range trade. There's certain days you'll get liquidity, and then the above, it looks like a black hole. That tells me that these it's going to be moving lower eventually. It doesn't have to happen right then, but you have a much higher probability, again, trading is probabilities, that it's going to come down and tag that liquidity down there because that's the big money. They're going to make the market move down there, like I was telling you about my game, right? So if you have this information, this is what I mean when I got Bookmap for the first time. I just saw this. There was no MBO data or anything like that, but I just saw this. I'm like, this is incredible. Like I can see exactly where the big money wants to get their fills. I knew how the games I would play, and you can see this one just got filled. This one got filled. This one's probably going to get filled. So knowing this, at the beginning of the day, when you're coming up with your thesis on what's going to go on based on structure, right, or patterns, you can say, okay, well, I'm looking for shorts in this instance if there's way more liquidity below than above, right? Or a day like today, I'm going to trade more range trade because there's liquidity on both sides, right? So you can gather so much information what the big money's trying to accomplish with the Bookmap.
That's incredible. So other question, traders, we had over here Scott for about 50 minutes in explaining his incredible story. His trading the bond at the pit in Chicago for years, then going to trading for a firm, and now being a private trader. Scott, you run a room, right? Where traders can find you?
Yeah, so I put it in that document too. You can find me at scottpulcinitrader.com. Really high technical name. So just go here, Scott Pulcini Trader. That's me. And you can see all my book. I've done Bookmap webinars. I do those for free on Thursdays. I have my own live trade room, but I do Bookmap on Thursdays. You can come and see. I trade in there exactly like I do for my trade room. So this is my room, or this is my page. Here's my live trade room. And then my courses. So I just came out with 2 new ones. The main one, here's the SI indicator course. So that's the whole foundation of my trading. When I was talking about the 6 distinct setups, that's this, right? So you want to understand this stuff before you start to apply this other stuff. But this is the example when I was talking about the reversion trade. Like these markets will come back to the volume events. It's just unbelievable. And then these are my trading strategies. So I was showing you these strategies a little bit ago. That's these strategies. Each one of these are just areas that I take trades and the rules around them. So I just got that course out too. It's taken me 3 years to make these, but those are my courses. I do mentoring as well. One-on-one mentoring. If you guys want to sit down with me personally, I'm in my trade room twice a day, every day. You can ask questions in there too. So this is my Discord room, right? All right, so here's a trader too. We can look at that real quick if you want. You got a couple minutes, but you can see like traders are in here posting what they're seeing. There's a lot of good traders in here. I had one guy that turned Lance turned 100 grand into 1.25 million a couple years ago. There's many profitable traders in there, right? So here's a good example here. Here's a trade. I hate trading this time of day, but I'm considering taking this trade here. This is what we call a sexy gexy. So remember I said that most of my trades, I wait for the move out. So see how this just the stop run just fired out. Most of my longs, I'll wait for that to get in. This is actually a trade into the 2 biggest gex levels. So I'm actually going to just trade this outright right now. So this is for a trading firm too. So I'm not, this is too much size anyway. So this is telling me right now. So I have this set. So this is the zone drawing tool. You can see here of the settings, right? So for my risk, so I use Apex too, trader funding for all these different strategies to keep track of my trades and stuff. But you can see I'm risking 10% on a trade here. If you are trading real money, you not want to be risking 10% on a trade, right? So I'm risking $500 a trade is what this is showing you, right? So I should only, if I want to risk $500, granted it's basing it on that entry up there and not right here. I got a better risk reward right here. I can only put on 0.3 of a contract or 3 micros. I'm trading this for a firm, so I'll put on 1. So this is actually, so I'm pretty much risking $1,000 on this trade if I'm wrong, right? So I do stop out right there if I'm wrong. So I'm going to put that in right now in case the market does its usual swipe on some tariff talk, right? So the way I trade these, so this is a different strategy. These are auto entry strategies. So what I was just showing you here quickly, right? You go down here. So these are the position trades where you're sitting and looking for bigger moves and you're waiting for the move out before you put the trade on. These are the auto phase strategies. So the TikTok, Sexy, Gexy, Floby. So I like
the names you gave.
Which one?
I like the names you gave over here. Like TikTok,
well, they're memorable, right? Like Floby. When I first came out with this, like someone said, "Isn't that the hair cutting machine you see on the infomercials?" Yes, it's supposed to be memorable and funny, right? So this is a Sexy Gexy. These are the only trades. I only have 3 trade strategies where I'll get in right when the event fires off. Why? Because most of the time it's not worth it. You want to watch the market confirm to show you the direction. We already went over this. This trade, I know these GEX levels. I know dealers are going to be hedging here as it comes into these areas, meaning they're going to be buying futures to hedge themselves. So now I already know I'm going to get their help moving out of here. And then you get a Dumb and Dumber. So this was a dumb money puke. This was the retail trader puke that usually reverses too, right? And now it's moving out here. So the way I trade this strategy, I usually want to have multiple contracts on. I should be trading micros on here, and I should have like at least 6 or 8 on. I will get out of half looking for the first move out of here. And I'm getting out right in front of the ATR because that's where these algos love to snap it back. And then I'll let another half ride looking for a bigger position trading move. So it's just using confluence, right? I already know dealers are going to be hedging at this area. And then I know this is one of my 6 distinct stop iceberg setups where retail traders are puking and it usually reverses like we saw in silver a little bit ago. So those things combined, I have a very good edge here. It's an edge. Nothing is 100% in any trading. When he tells you that, or they say they're 90% or whatever, you run the other way, right? It's probabilities. I have a much higher probability of this thing bouncing out of here than I do moving lower. Does that mean I don't put my stop in because I have a higher probability? No, my stop's in there. If something comes out here and I get stopped out, fine, on to the next trade. If you have an edge, and this is the other big thing, the biggest thing, most traders don't know if they have an edge or not, right? They hop from one thing to another thing to another thing, one educator to another educator. If you know you have the edge, that takes all the anxiety out. Now you just wait for your setup and your entry and your exit, and you put the trade on and you let it work. You don't know what's going to happen next. Trump can come out right now and say we're putting 200% more tariffs on China. This thing's going to fall off the table, right? So it's like I put the trade on, I have my stop in, I have my exit, and I let the trade work.
So understand, traders, that what you need, and Scott is saying very clearly, is a strategy, is a system. So where you have like entry, rules, exits. So you have to know everything in advance. Not you getting the trade, you still have to calculate where you're going to get stopped out, where you're going to trail. What is the system about? So before trading live, get in the room, okay, learn the strategy, test it, improve it, and simply become an expert in the strategy. Don't simply jump from room to room, change system every single time, but improve instead, because there's no perfect 99% strategy out there. The perfect trader is just like yourself, and it's mainly also mental discipline, and then apply the strategy and apply the rules, because Scott or me or whoever can give you a good strategy, but if you don't respect it, if you simply like will cut the wins too fast, or you let run the losses, then it doesn't really matter about the strategy. It matters about your mindset. And you can see over here, like the bounce, just like Scott did. Oh, beautiful shot, buddy.
Thanks. So, I mean, that's for example, right? Like I had no idea that could have kept going down, but I know I've got all my ingredients for the trade. I had my GEX levels. I had my main ingredient, the stop iceberg event. This was a stop run, and you can see it even there. So this is showing you this was 70% or higher of the most selling in the last hour. Well, in this case, it was sell stops, right? But I know it usually reverses off of there. I had my entry, and this one I enter right in the middle of the zone. I like to have multiple contracts on here where I get out of one on the dealer reaction, then I hold one. In this case, I didn't have this. You can change these too. So you can cross trade here, which I should have done. So you go over here. This is another awesome thing about Bookmap. I can trade the micro, which I should be doing based on my position sizing, right? You hit start, and this thing pop. I don't know why they have all these different. I know what they're doing. They want to protect traders. They don't cross, when you switch products. But anyway, now I'm trading. Now I'm in micros. So now what I should have done here, I should already had this set up. What I would have done when this come down here, I would have probably put on 8 micros. I get out of 4, looking for that first move out, and then I'm going to hold 4, looking for a bigger position trading move because this was a stop iceberg event. But yeah, that was real time, and I just do every time I see the trade. If I'm available here, I put the trade on. You can't. I don't say, "Oh, should I put this one on? This one doesn't feel very good. The market looks like it's going to do that." Right? I don't know what's going to happen next. Neither does anybody else. Right? Unless you're God Almighty. So the point is,
follow the strategy.
Follow the strategy, and the same goes for your stuff. I'm sure, right? Like you see the pattern. I see your patterns all the time when you post them on Twitter. It's like, this is the pattern. I put the trade on. Right? And that's all.
I always say, I don't know how to trade. I simply follow what the strategy is telling me. That's it.
Right.
That's it.
Because you don't know what's going to happen next. Like trading in this is the best book that covers this that I've read about trading, psychology and everything else. You got to consider, like, it's like just being like a casino, right? Casinos know they have the edge. They know the gains the percentages are in their favor. Do they freak out and shut down the casino when one guy comes in, one whale comes in and waxes them for $1 million in one night? No, they keep dealing the cards because they know over a year's time they will make money. It's the same if you have a trading edge. If you know there's an edge, and that's what the beauty of this, you don't have to guess if this is an edge. I've been doing it for 8 years. I have 25 years of experience. When I'm telling you it's an edge, you can listen to me, or you can't. You don't have to listen to me, but I'm telling you this is the best edge I've ever seen. So now that you know you have the edge, you know where you get in, where you get out on most of my trades. I was telling you, you know your sizing. You take so much anxiety out of the trade. Now you just play your edges. Every time you see the trade, you put it on. On days that it's not working, or you're getting tariffed to death or whatever, you hit your stop limit for the day. You say, I'm done for the day. Tomorrow's another day. Right? Exactly. That's another story that I've told many times. I've had 2 different times that I've lost $800,000 in minutes, back-to-back months in literally minutes. Both times, so at my trading firm, when I could put on the 3,000, my loss limit was 100 grand. So at 100 grand, my risk manager was supposed to stop me, and I was supposed to stop myself, more importantly, right? It was negative reinforcement, because there were so many times I would go down like 150 grand, and then I would take a break, and I come back and I call the risk manager and say, hey, give me another 100 grand to play with. If I lose that, I'll be done for the day. So it got to the point where, and I would make it back, right? So it's called negative reinforcement. Negative reinforcement is when you do something wrong in trading and it works out, and then you do it again, and then you blow out your account, right? So there had already gotten used to, and by the way, this is a reversion trade, exactly the one ATR reversion that I was telling you about. Tags that I didn't take this one, but you take it at that's the reversion entry to the tick back to the zone. It's unbelievable, right? So anyway, both times they were supposed to stop me at 100 grand. I was supposed to stop myself. But that's another thing you need to learn about yourself. When you go on tilt, you turn into a different person. Like I would wake up the next morning, both times after losing $800,000, I woke up and I'd be like, what was I thinking? Like, why would I ever do that? You turn into a person and you're getting killed, right? So have your loss limits in place. And so if I just would have stopped out at the 100 grand like I was supposed to both those days, I have an extra $1.4 million in my bank account. But I don't, because I didn't follow my own rules. So the point is, find a broker that you can put a stop loss for the day. If you hit it, you're done. You can't put on another trade.
This traders really listen, because it's so important to keep the risk under control. Otherwise, you're going to blow up. It's so important.
100%. You will blow up eventually.
Yeah, because you can be disciplined 100% of the days, but then it comes one day, maybe you start, oh, maybe I should trade, not trade. Then you start trading. Maybe you add to the position. You don't want that day. You don't have discipline. I would say that the black day, okay, or the black swan day, whatever, it happens to everybody. You're a newbie, you're an advanced trader, you're a professional trader, you're I would say a firm trader. It can happen to everybody. So use the tools that right now we have with the brokers to help you. Stop loss, and the tips that gave Scott Pulcini over here were amazing. Scott, we reached over here 1 hour, actually 1 hour and 2 minutes. So I'm going to upload this traders on also YouTube for who couldn't watch it. Thank you, Scott, for being over here with us today. Also, I'm going to send to you traders all the information if you want to join Scott's room, or if you want to simply ask some questions. As he said, every Thursday he's on free for Bookmap. He gives a free webinar every Thursday. So I'm going to put also the link for that, and also all these links for the tools that he has, and also for this room. Again, thank you so much, Scott, for being here with us. It was amazing, really an honor. I love to hear your story, and really thank you for so much for being with us.
Yeah, thanks for having me, and we could do this again anytime you want to get back on. Maybe next time we'll go over some stock stuff too with the volume pressure. I did see one question in here: is the Bookmap volume pressure the same as CCI indicator? I don't know what CCI indicator is, but no, it's simply telling you if this is the most buying or selling in the last hour, the way I have it set up. And knowing that, whether they're right or wrong, some days you'll see this selling coming in, like kind of like it did here, and it ends up going, right? So we have patterns for it. But the point is, this is good information. So even if you can't get the iceberg information on stocks, you can still use the market pulse to have a very good indication. You add that to your liquidity thing, the patterns we were talking about there, and you got yourself some awesome trades. So, but yeah, I look forward to doing this again with you, Jay.
Thank you, traders, and thank you, and good luck for your trading.
Thanks.